Hey guys, Mike here, head trader, True Trading Group. June 20th, much better day than yesterday the 19th. If you watched my previous video, you know I had a rough day yesterday. I was 0 for 4. It was a very, very frustrating day for me. I got stopped out by pennies sometimes, and then stock would then continue much higher without me, much higher than my entry price. It was a very, very frustrating day for me yesterday, but it happens. My goal today was to just book a green day. It's all I wanted to do. I'm not trying to make back everything that I lost yesterday. Just want to focus on hitting singles, getting back on track, scale my position size back a little bit, and be extra conservative and patient with my trading. Just one trade today. Was a small gain, nothing to write home about, but was still a gain. Reached my goal, booked a green day, and that's all I was trying to do. Okay, I'm not trying to do too much. I'm just focusing on singles. So what I'm going to go over with you on this video is, one, a little trick that I use when I'm just trying to book that green day and I'm trying to be conservative, and it helps me out a lot. So I'm going to go over that with you. And secondly, I'm going to go with you a volume lesson when it comes to wedge breakouts. First, the little trick that I use when I'm just trying to lock that green day. Normally, okay, guys, on a regular trading day, when I scale out of winning trades, I do it in 3 tiers. Okay, so say I enter a position, say I have 10,000 shares of whatever, okay, and the stock makes its first move. That very first move that I get, I sell 25% of my position. So in this example, I would sell 2,500 shares, and I'd hold 7,500. Then when I get that follow-through move, okay, and like my target is hit, I sell 50% of my position. So I would sell another 5,000 shares. Now I'm holding 2,500 shares. I would hold 25% of my position in case we get real continuation, momentum, and follow through, and we get, the stock runs for an extended period of time and I can stay in the winning trade longer. That's how I would normally tier out of my positions. On a day when I'm just trying to lock it in, okay, either maybe it's a cold market, there's no follow through. I also use this trick, and when I'm coming off a big loss or a string of losers, this is another trick that I use just to focus on hitting singles. When I get the first move, instead of selling 25% of my position, I sell half of it right away. Lock in that gain, lock in that profit, and now I have half my position left, and if it continues, I sell 25%, and I'll hold on to that last piece. So on a normal day, I'm selling 25, 50, 25. On a more conservative day, I'm selling 50, 25, 25. It's a little trick that I use that really helps me when I'm trying to book that green day. It's the same trick that I used. If you've been following my channel for a while, you know I had a streak going for a while. Just up until recently, a few weeks ago, I had not had 2 consecutive back-to-back red days since the end of September. Okay, that streak has recently come to an end. If you've been following my channel for a while, you were with me through that whole streak. And I used that trick also when I would come off of a red day. I implemented that trick the following day just to lock that green day and keep the streak alive, and it worked. It worked for me for several months. So I wanted to share that with you. Now let's get into the volume on wedge breakouts. Here's this AETI. This is the trade that I went after. Okay. I'm going to show you exactly what it was that I was looking at. So AETI broke through the high of the day on big volume. Okay, this was by far the biggest volume the stock experienced on the day. It was, double any of the previous high volume bars when it broke through the high and then took off like that. Okay. The other thing that I want to, let me add the indicator because I don't have it up on this. Let me add this for you because I also used the trade line for this one. Okay, guys, so this yellow line on my screen, this is the trade line. This is the 9 EMA. Okay, and what I noticed earlier, okay, was when the trade line crossed over VWAP here and it was holding support. Okay, the 9 EMA, AETI, after that pullback, found support at the trade line, held support again, pushed higher, held support again, pushed higher. We started to pull back in down into this area, and you see VWAP, the 9 EMA, 38.2 fib started converging here on this area. So I said this is going to be, this area right here, I thought was going to be a nice little buyable area. So I looked to get long. Here's taking my trade announcements. I'll zoom this in. Okay, at 10:20 a.m. That's how conservative and patient I was today. I didn't make my first trade. I made one trade today, guys. This is it. And I didn't place that trade till 10:20 in the morning. And here you can see long AETI at $1.69, stop loss $1.55. Take you back to my to the chart. Right there is my entry. Okay, on AETI, we pull in VWAP in the 38.2 Fibonacci retracement level, hold support, and then we bounce off that level and we start to push. I then noticed that we started to form a real nice wedge pattern. Let me go back and delete some of the noise. Okay, and what I started to notice was a nice little wedge pattern. Okay, here's your real nice looking wedge, and you've got VWAP and the 38.2 Fib level holding support on the bottom piece of this wedge. Okay, so you've got a real nice wedge forming directly above VWAP and the 38.2 Fib. I thought this is a great pattern. If we break up and out of that wedge, we should continue higher. This is where the lesson comes in on volume on wedge breakouts. Guys, when you get a wedge or a flag, whatever you want to call it, a flag or wedge, pennant, whatever it is, okay, there's a very specific volume action that you want to see during this pattern to give you confirmation the stock's going to continue higher. And that is heavy volume on the way up when the flag pole is created, and then you want to see light volume during the consolidation, and then you want to see heavy volume come back in when you break out of the wedge. A rule of thumb that you can use is you want to see the volume that comes in on the break out of the wedge should be heavier than any volume that comes into the stock while the stock is inside the wedge during its consolidation. Okay, and AETI, right here, we broke out of the wedge, but the volume on the breakout was even less than this volume when the stock was still trading inside the wedge. This is not strong enough volume out of a wedge breakout. When this broke out and we didn't get the volume surge that I was looking for, I came on live in chat to all of our members. I said, gang, I'm taking some profit here. This is not the kind of volume that I like to see to make me feel confident we're going to continue, break through the high and go. Because your resistance level is the high of the wedge. This is your pivot point, okay? You have to break through this level in order for the stock to continue once you come out of this wedge. And if you don't get that real heavy volume, you're not going to break through that high. Okay, the trade will fail and it will roll over, and that's exactly what AETI did. So when I saw the volume was light, I took some profit off AETI at $1.83, and I was still holding some of my position in case we went. So I sold 50% of my position at $1.83, and I ended up stopping out of the other half at $1.65. Okay, so once we pulled back down into here, I sold out of what I was holding, of the remainder of that piece. But it's this volume lesson that allowed me to sell half my position right there in that candle. Okay, the volume that you would have liked to have seen on that breakout would be heavier volume than what you saw inside the wedge. That's the kind of volume bars you would have liked to have seen. Okay, much higher volume than any volume bar that the stock had traded while still inside the wedge. Okay, so here's your volume, the heaviest volume the stock traded while inside the wedge. You want to see heavier volume than that when you break out of the wedge. It's just a rule of thumb that you can use when trying to identify strong volume out of the break of the wedge. Okay, and you can see we did not get that increase in volume. Okay, you more so want to see this type of volume, not what we got. And that's why the trade failed, and you can see AETI just kind of rolled itself over later on in the day. Okay, so that's it. So that's the lesson to take from today. Little volume lesson when trying to determine if you're getting confirmation on a wedge breakout. And that's really what this is. This is confirming a wedge breakout or being able to identify early that this breakout pattern is going to fail. See you guys in chat tomorrow. Take care.